A presumptive taxation scheme is a simplified method of calculating taxable income for small businesses and professionals in India. The main objective of this scheme is to reduce the compliance burden and administrative hassle for small taxpayers by freeing them from the need to maintain detailed books of accounts and get them audited. Instead of calculating their actual profit by deducting all eligible expenses from their total turnover, a person who opts for the scheme can declare their income at a fixed, predetermined percentage of their annual turnover or gross receipts. The tax is then calculated on this presumed income. Key sections of the scheme. The presumptive taxation scheme in India is primarily governed by the following sections of the Income Tax Act, 1961, Section 44 AD, for small businesses. Eligibility: resident individuals, Hindu and divided families, HUFs, and partnership firms, excluding limited liability partnership firms, with an annual turnover up to a certain limit, currently 3 crore rupees if at least 95% of receipts are digital, or 2 crore rupees otherwise. Presumed income. The income is presumed to be 8% of the turnover for cash receipts and 6% for digital receipts. Section 44 ADA, for certain professionals. Eligibility: resident individuals and partnership firms, excluding LLPs, engaged in specific professions like legal, medical, engineering, accountancy, etc., with gross receipts up to a certain limit, currently 75 lakh rupees if at least 95% of receipts are digital, or 50 lakh rupees otherwise. Presumed income. The income is presumed to be 50% of the gross receipts. Section 44 AE, for small businesses engaged in the plying, hiring, or leasing of goods carriages. Eligibility: any person who owns not more than 10 goods vehicles at any time during the year. Presumed income: a fixed amount per vehicle per month, based on the type of vehicle. Benefits of the presumptive scheme. Simplified tax compliance. The need for meticulous record keeping and formal audits is eliminated. Reduced costs. It saves money on accounting and auditing fees. Ease of filing. It simplifies the tax return process, as eligible taxpayers can file using a simpler form like ITR4, Sugam. Predictable tax liability. The income is calculated at a fixed percentage, which helps in financial planning. Single advance tax payment. Taxpayers under Section 44 AD and 44 ADA are required to pay their entire advance tax liability in a single installment by March 15th of the financial year, instead of the regular quarterly installments. It's important to note that if you opt for the presumptive scheme and your actual profit is higher than the presumptive rate, you can declare the higher income. However, if your actual profit is lower, you cannot declare a lower income unless you maintain books of accounts and get them audited.